Okay, well, let's try to figure out what fraud is fraud. Let's say I buy a lot of contracts. Like use random stock. I buy contracts that are options on GameStop. I then publish.
This is just a hypothetical.
Totally hypothetical because I don't want to. I mean, I don't want to really try to hurt anybody.
Why not? Can't we just ask about Roaring Kitty? I mean, why wouldn't we?
If someone publishes,
look, Dave, you ask about a specific thing. I just want to talk to your viewers for a second. The SEC runs a civil law enforcement agency. We're a cop on the beat, and you would expect us to investigate where we investigate, right. But we don't talk about it publicly because we follow the facts and the law, and only if we think there's something to bring in front of a court do we then talk about it publicly.
Hence how hypothetical. Let's say you're Paul Weiss, you're my lawyer, okay? I say to you, look, I want to put up a cryptogram. And it's of a chair leaning up, which we know from video game playing means, come on, this is the ninth inning, get ready. And we know that I'm a person who happens to like the stock of GameStop. This is the signal, come on, get ready. Is this something, hypothetically, that the SEC should worry about?
So, look, again, it's not so hypothetical because you're describing things that are in the public domain and the public is interested in. So, but generally speaking, you have to make sure that you don't mislead the public and that you don't in any way do things in the markets that may be manipulative or misleading. And so that's the key thing in our capital markets.
No, the key thing is if you can cure it with disclosure. This is Brandeis. You know if they disclose that this is something that a call to action, then you can't go after them.
Disclosure is one really key part of our capital markets. When you buy the stock of a company, you expect that they give you full and fair disclosure. That's, by the way, not what you're getting right now in this crypto field. So I just, cautionary tale there. That disclosure. But disclosure doesn't necessarily protect a bad actor. If they're manipulating a market, you can't just simply disclose that away, particularly if you're misleading the public.
Not cured. Disclosure not cured. Very good.
Can I ask a broader question about the public markets? Because it comes up a lot now, in particular sometimes from those who are actually very active in these very large private markets. But the idea that our public markets are broken, that we have 7 companies that represent 30+%, for example, of the market cap, that we have far fewer public companies than we did 10 or 20 years ago. I'm curious how you think about that and whether you agree or disagree with those who would argue that the public markets don't work the way they should.
Look, I believe deeply in competition, and we in the U.S. benefit from very large capital markets, which are 5 times our banking system. $23 trillion banking system, $110+ trillion capital markets. Not Europe, not Asia. That competition. But I also believe in competition between public markets and private markets. Maybe it's because my dad had a small business of 30 people. Maybe it's because I did work at Goldman Sachs that when I was there, and Jim, you were there.
Yeah.
Yeah. You were on a different floor.
No, I wasn't on a different floor. I was on a better floor. Higher paid.
Don't lose track here. Don't lose track.
Sorry,
but I really do think that public and private can compete with each other and benefit the American public. The key is to make sure that there's standard rules, that people get the proper disclosure if you're investing in something, that basic bargain. They get full and complete information on material aspects of the companies, but also that the capital markets, like this here, are operating free of fraud and manipulation.
But what about the private credit markets? I mean, they've grown enormously, for example. There is, you could argue, a lack of transparency, but that may go along with it because you have typically a contract between one borrower and one lender.
But there what we have is we have competition between private provision of credit and the banks. And generally, that's a competition that we, promote. Now, at the same time, do we have to make sure the investors in those private credit funds are getting, the disclosure they need and they're not getting misled and so forth?
You have a really active following on social media. When you posted yesterday you'd be on, tons of replies. And
thanks. Did it help your viewership?
We'll see.
Well, that's why we're talking.
The 2 issues that I saw they wanted to learn most about was the timing of the Ethereum ETF approval and
I think that happened a week and a half ago.
And what pressures you felt to make that happen. And then second would be trading patterns among members of Congress. Can you talk about the two?
We have in the U.S. already a way that you can invest in various underlying securities and underlying commodities.